Hello everyone, welcome back to the channel. And yeah, I know it's kind of been a long time since I last uploaded the video, maybe like a month or two. Yeah, but I don't care. I don't really want to be a trading YouTuber. I just feel like posting whenever I want to, really. And also I took a kind of a break from trading for maybe 3 weeks, 2 weeks, 1 month even. But we're back, and we're so back that we made actual profits today. As you can see here, I mean, I only traded the movement with only one micro. I mean, it's not a lot, but 300 PNL, I mean, it compounds. As you can see, we're now in this is the evaluation on Lucid, $52,314. So, yeah, I mean, we're getting there step by step. At the end, it was like 160 points movement. So it was a very nice trade. And yeah, I mean, we keep being green on everything pretty much. So let me, guys, recap you on the trade that I took. Let me do this. And let's go to the replay mode. That's 7:30 here in my country. It opens 7:30 in the morning, the nasdaq. So here we are. So for the context of this session, I choose to pretty much just mark, like this dealing range with the, I mean, most obvious low volume nodes like this one right here. I mean, this is kind of too big, but that low volume node and this low volume node right here. And on the downside, I marked, I mean, from here to, yeah, basically here. And as you can see, here are the two low volume nodes that I marked. And of course, the previous Virgin consolidations, on this case, it is this one. No, not this. It is this one right here. As you can see, I mean, pretty much that. I think it was one less candle. Yeah, whatever, it's pretty much the same. And right here. As you can see, it is between the two low volume nodes. This one is two, so that's why I chose those two. Because they are our future reference points. They're also in between low volume nodes, and this is a high volume node. So yeah, I mean, it's reference points, right? So again, we mark this. I think it was like right over here. Yeah, as you can see, that's pretty much everything that we marked on the pre-session. And on the session, let's see. First, we open, I mean, on the macro analysis, I can tell you that much. I mean, yeah, it's been like kind of an uptrend. As you can see here, we're starting to stall. Also, a couple of days, consecutive days with lower point of controls. But I mean, we had a bull run, like it lasted how much, like a month, pretty much all April and half of May. We were in a bull run right here. So yeah, it's pretty obvious that at some point we're gonna stall, right? We're gonna stall, we're going to lose momentum, and I mean, yeah, retracements are pretty normal, but we can still keep the bull run. We can just, I mean, from here we can actually go down. I don't think so. We are just retracing a bit and then going up, the most probable thing. But yeah, back to the trade. Here, as you can see, we opened within the previous day value area. So we opened, yeah, I mean, dumbass. We opened inside the range of the previous day value area. So that's one thing to keep in mind. So I'm going to skip this because this is the opening range formation. So as you can see here, let me go to the 15 minute. As you can see here, this is our opening range. So we obviously mark it. Let me lines red, no fill color, and this is the opening range. If you count the points on this, it is basically 200 points. So again, it is a very wide opening range. And as you may remember, I don't know if you know this, but Dalton explains this, wide opening range. You opened within the previous day value area. So I'm expecting since now a two time frame condition. What does this mean? Balance day. Pretty much I don't expect a trend, neither up or down. So on the opening range, how you trade this, I mean, remember, you extend downwards, you have a range extension, and then you have a range extension, and you have a range extension, you have a range extension. You probably not have here, you can obviously go here, but these are balanced market conditions. There is no trend here, right? So I'm not expecting for price to break down or break above. It will be a mistake because again, wide opening range. That means the discovery on the opening range, the price discovery was a two time frame discovery. It was not only one time frame. Not only sellers. I mean, yeah, you can see here and I mean we're pretty much neutral on the delta. We're at the zero. So it's pretty balanced there, okay? So again, let's go here and mark the value of the opening range and go here and mark the point of control of the opening range because, well, obviously this is important. It tells you if price discovery was skewed to the upside or the downside. In this case, it's in the middle. Again, I'm expecting balanced market conditions. And yeah, I think pretty much this one right here. So yeah, I'm expecting balanced market conditions. I don't expect. So in the case that, spoiler alert, it happened, we extend downwards, I'm not going to enter shorts because going shorts on this, even though you might say, hey, I mean, we are in a downtrend right here, 4 consecutive days, POC is sitting lower. Yes, but we're opening within value, and also we have a wide opening range, bro. Don't go short, go long. You want to trade the faith of the extension. You don't want to expect a breakout to the downside because, surprise, it is not going to happen. It is not going to happen. It can happen. It is very rare. In very rare occasions, a wide opening range. And if you open within value, in very rare occasions, you're going to see that we are going to hold down. I mean, it is also the type of day. This is a normal day. On the normal variation day, this is neutral, sorry, this neutral day. On the normal variation day, yes, you can go down, but you're going to consolidate lower, like right here. Why? Because, I mean, it is not a trend day, so there is not a lot of conviction. Yes, sellers might win a little bit the extension, but at the end of the day, they're going to consolidate not very far from the opening range. But yes, I mean, it can happen. So on this time, what are the possibilities? I mean, wide opening range, POC in the middle, the delta pretty neutral. I mean, this is screaming balance day. We're not going to move from here. So let me just kind of skip this. As you can see here, we're extending downwards and we're starting to see kind of aggressive bearish volume. As you may see, let me skip this a little bit. We're starting to see aggressive volume, and you may say here, yo, bro, this is not going to hold. Just place the short, cover yourself in the point of control, and maybe aim a little bit lower. No, this is not the case. Again, this is a two time frame market condition. This is not one time frame. If this was one time frame, the point of control will be sitting right here. But it isn't. It is sitting in the middle. Range extensions are normal. Remember, you also can calculate based on the previous day range. For example, this one is 500 points. I mean, you can expect a normal, like pretty much a normal range. On this day, it can look like this. It can look like this if we have a normal variation. Like this can be the whole range of the session. It can look, I mean, if then we jump into buyer aggression, it can look like this, whatever. It is still within range. So again, let's see. Let me skip here. And as you can see, yeah, we have aggressive momentum here. Very aggressive selling momentum on the downside. As you can see, we're pretty much already very negative in the delta, negative 2000 contracts. But again, you have to remember your open calls. This can be an open test drive easily. This is not an open drive. So the possibilities of this movement to hold are pretty much not a lot. The movement it is not going to hold. Why? We're testing a reference point, as you can see. We're not breaking down. We have a wide opening range again. POC placed in the middle. Where we're still inside range here. Inside the range. We're not doing, I mean, at most, what can happen it is that right here we consolidate. That can happen. Yeah, it can. This can consolidate, but at the end of the day, it is still balanced market conditions. So, entering here and going short, even shorter than here, it is just, don't do it. Don't do it. Come on, bro, don't do it. So yeah, I mean, whatever. Let's see here, because my entry was at almost 9. Not a 9, but almost 9. I mean, this is funny because I don't see the candles here. See if I can fix this. Oh, what? Why am I? Okay, yeah. That was strange. Motive wave? I don't know, bro. Just fix your platform, mate. So yeah, I mean, let me just skip this a little bit. And as you can see, what did I say? We are consolidating right here. But also you have to remember that where you have to answer, the market has to answer two questions. Where does price wants to go and how good of a job is it doing to go to that place? Okay? So right here we have very negative delta, very negative. If you see the big trades, it is filled with aggressive selling positions. So again, that answers. Where is the market trying to go? Down. How good of a work is it doing to go down? Eh, if you ask me, not very good of a job. Why? Because look at this. We've been here since 8:15. Yeah, 8:15 in the morning, and now we're pretty much. I mean, it's just been like 30 minutes. But still, in 30 minutes, we're not doing lower lows. We are getting fat wicks. That, as you remember, fat wicks are a sign of excess. So this is showing me that we have excess down here. And David, what is excess? The excess, it is when price, I mean the markets are not perfect. So in order for the market to attract new people into positions, the market goes, for example, long. Why does it extend the range upwards? Because the market wants to attract sellers. Why does the market extend downwards? Because again, we're creating excess, and that excess gives buyers, aggressive buyers, opportunities to go long. That's pretty much what excess means. So, and as you can see, the pretty most common sign of excess, it is fat wicks. As you can see here, I mean, I marked the fat wick, but you can see it here. I mean, like, for example, how long is this wick? 50 points. It's a lot. We're creating another wick right here. So the market is creating excess. This is the first sign to actually go long. No, but no, David, we're in a downtrend. We also have excess here. This is not excess. This is part of the opening range. That is not excess by definition. Excess will be if we go above here and we create a tail. This tail will be excess because again, the market wants to attract market makers, locals, whatever. They want to attract sellers. They want to attract buyers. And as you can see here, we're attracting buyers. Look at this tail, for example. 67 points. This is the first sign of a potential auction rotation. Also, if we see here, I mean, yeah, the point of control, if you remembered, it was right here. Now it migrated downwards. So that's pretty much the only ground that a bearish bias can hold. The only sign of bearish movement it is this, but all the confluences are telling you go long. So let's skip this a little bit because this was not my entry. Okay, I entered like right here. Why? Because again, if you see on the 30 minute, why 30 minute? Because it is how much I forgot the name. If I remember the name, I will put it on screen, but it is in the TPO every 30 minutes. It is this thing that it is right here on screen. Every 30 minutes, you have the thing called rotation factor. What is the rotation factor? Between each 30-minute candle, you have to give the market how well of a job is it doing to go either down or up. So, for example, let me pause this. If we see here, for example, we have we have this low and this high. So if you compare it, this low is actually higher. That is a +1. This high is lower. That's a -1. So if you have 1 minus 1, it is 0. It is not doing a great job. It is stale. But if you have this low and you have this high compared to this low, I mean, if you compare it to this low and you compare it to this high, this is a +1, +1. What does that mean? The auction rotation is +2, so we are rotating to the upside. Look at what happened next. This high, I mean, yeah, this high and this high are pretty much stale. It is a stalemate, so it is a 0, but this low and this low is higher. So it is a +1. It is no longer a +2, it is a +1. So that's the first sign of the auction rotation, the rotation factor. Yes, we're making higher lows, but we're not breaking the higher highs. If you go after, I mean, like this high and this low, they both are -1. So again, the auction is rotating to the downside. You can use this, I mean, you have to, pretty much you have to study this. It's not just like, use this, use that, and you will make money. It never works like that. I'm sorry, my friend. You have to, you have to study, but this is just an oversimplification. So again, what do we have here? On the opening, this is our high, this is our low, right? We have lower high, lower low. So -1 and -1. The auction is actually going lower. But in this case, this high is lower, it is a -1, but this low is higher, that's a +1. So that makes it 0. So for the moment right here we're staling, and we probably will have an auction rotation to the upside. So that's the first that's a very early signal of rotation. So again, we go to the range chart now that I explained that. And let me just skip this a little bit to show you guys what my entry actually was. Yeah, I mean, the thing here is that we're here in a low volume node. So I pretty much I entered at this price. The stop loss, I covered myself. I don't want to take any risk to getting wicked. And yeah, as you can see, it's pretty much a 1-to-1. As you can see here. Yeah, I mean 1 point whatever. Doesn't matter really. So this is the order that I took. And let's see how it went. As you can see again, we're seeing right here aggressive buying. At first, yes, the market started to go lower. That doesn't concern me a lot because again, my stop loss is outside of the structure. And at some point, I mean, if we see the 15-minute, it is not going to show you a lot, but again, also here, obviously, we have this range extension right here. If we fail to protect this value area, as you can see right here, we have a low volume node. So that means if we actually break through this is going to be path of least resistance. So the most conservative take profit would be on the point of control, like I did. The most the, the most obvious take profit right here will be to take the highs, the opening range high. This will be the best sorry the best trade, the best place to place your take profit. But I went conservative. You know, I went conservative. It is still a 160 point movement. So I went here. I could have went here and would have been probably the most smart thing to do, but I ended up placing it here. A 1 to 1.6. It is still nice, don't get me wrong. So again, let's go to our very nice range chart. I mean, what I hate is how big this looks. Like, seriously. So maybe let's do this. It just looks so big. It is not that big, bro. And I mean, yeah, I pretty much explained everything on my trade, so let's just skip the time a little bit. And as you can see, the price actually started to go up. Remember, this zone right here, it is our our path of least resistance. So even though we have a little bit of drawdown, it is nothing crazy. Again, even on the delta, we're a little bit bullish on the delta. If we watch again, this is important to keep your your eye out. Like, watch this. It is the rotation factor. I mean, this is loading. I don't know why it takes so long. There you go. What does the rotation factor tells me? I mean, let me delete this. What is the rotation factor telling me? Again, this is the low, this is the high, higher low, +2, higher low, probably higher high. We're pretty much breaking these highs, so that's pretty much another +2. The auction is actually rotating to the upside. And the fun thing about this trade is that we did not have like an aggressive delta signal. We did not have like a big trade signal right here. It is just all about market mechanics. This trade was good because of that, because it shows the importance of actually knowing market mechanics instead of relying on tools like like the delta, relying on the big trades indicator. If you understand market mechanics, even though, I mean, right here price is not showing, I don't know why, sorry. This is stupid. The price is not even showing, bro. What the hell? um Wait, let me fix this really quick. There we are. I'm sorry for that. I had to reset the platform. I don't know what happened. I mean, Motiboy, please fix your platform. But again, what I was telling you is that these days are good because, I mean, as I was telling you guys, this is not a day about relying on the big trades indicator. It is not a day about relying on the delta. It is a day about actually understanding market mechanics. And if you understand the market mechanics, you're going to have a good time on this. Because again, I didn't have a strong delta confluence here. Like if you go to the 15-minute, I mean, this is a joke. I mean, yeah, this one, but compared to this one, compared to this delta candle here, it's pretty much nothing. So yeah, if you trade this, you couldn't have depend on anything unless actual market mechanics understanding. That's the thing that would have made you money if you use this today. So let's just time skip a little bit. And yeah, as you can see first, the market is stalling. You can say, how is it going up? David, how is it going up? The market it is stalling. It is not a clean movement. You said path of least resistance, but I don't see the least resistance. Chill, chill. I mean, yeah, this candle looks scary. I'm not going to tell. I'm not going to deny you that this candle looks scary. But again, my friend, rotation factor. Remember, this is plus one, 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 minus one, but plus one. That makes it zero. That's again, that can mean an early signal of auction rotation, but it is just, oh, I think I skipped a lot. But yeah, see here, yeah, minus one, plus one, but again, plus one and plus one. We're back again on the uptrend here. It's just a little pullback. We're not afraid of little pullbacks, are we? I hope not. Personally, I'm not. And I personally hope that you're not too. So yeah, pullbacks are normal. Again, the entry, it is not that very optimized. I could have waited for the point of control here retest. No, the point of control is down here. What am I doing? I don't know why it was so up. But I mean, yeah, for a good entry, you can mark the dealing range. This is a low volume node on the value area low. Outside the value area low, so that would be a sniper entry. But instead of relying on sniper entries, I just want to buy whenever I can. I don't want to rely on sniper entries because oftentimes they don't come and you will miss your entry. At this place, I'd rather to have my entry earlier. Yeah, I mean there might be a little bit of drawdown, but if the idea is right, both the sniper entry and my trade will both hit profit. This is not about the entries. I don't care about the entry. I just care about my trade being right. At this point, I just lower the risk right here on this low. No, it was under this aggressive buying movement. And yeah, I mean, just pretty much, it was kind of a long trade. It was like 20 minutes, 20 minutes long. But at the end of the day, it was pretty obvious where the price wanted to go, right? Again, drawdown again, we're break even. I'm not putting break even because I don't need it to. I need the trade to breathe. Imagine if I was right here and just put break even. I'll be out for 5 times already. I want the trade to breathe. And trade is actually breathing. So, and it is actually going well. My bias is holding. If you look at the delta, I mean, the delta on this session was kind of tricky because throughout all the time it's pretty much staying like stale. It is not moving. But again, if you're doubting, just look at the rotation factor, man. Let's go to the 30 minutes. Again, plus one, plus one, plus one, plus one, plus one. The rotation factor is staying up. If you focus yourself too much on the lower time frame, like here, you're saying, bro, this is consolidated. This is not going up. But if you just look at the rotation factor is going up. And also that we're consolidating on the downwards extension, it is actually beneficial for you, man. Why? Because the most time that the market spends trying to go down, so from here to here, it is trying to go down. The most time it struggles with, and we don't have lower lows at any time, that means that the price will reverse because that's an auction failure. We're trying to go down, we're getting rejected, so sellers are failing to push the price lower. So that means we are having absorption, and therefore the buyers will eventually win this. Again, it is a two time frame, uh, a double time frame situation right here. So again, the double time frame, the sellers control a little bit, then the buyers control it, again the sellers, again the buyers. It is not only one time frame condition, it is a two time frame condition. So yeah, I mean, after enough yapping, I just want to see this touch my profit. And right here, as you can see, we hit full TP. Again, it was not the best trade. The best trade was pretty much this one, a 1 to 2 to the value area high that, I mean, as you can see, eventually we pretty much hit it. We went up all the way and we hit it. Even you could have held to the value, to the low volume node here, or aimed to these highs right here, to here. But I just pretty much stayed conservative on this one. It was already an hour and a half trade. We stalled for so much. It was an hour and a half, and I was like, bro, I'm done with this. I want my profits. Even though if they are 300, they are $300 well earned. They were well earned. And it was an hour and a half, almost 2 hours, an hour 40, hour 50. I mean, I'm pretty sure I can see it right here. Yeah, I mean, look at that. I entered, yeah, an hour and a half. It was the trade. So I was on. Waiting for this movement would mean waiting another hour, and I did not want that. So I said, what? I said, you know what? I mean, yeah, this is probably actually going higher, but I'm just getting out. I don't want to risk any potential reversals. Maybe we're here and the price reversed. I don't want to risk that. The most obvious and profitable and statistically probable TP to have, it is the point of control. If you want more profits but a little bit more of risk, you put the TP on the low volume node or on the OR high, whatever. So yeah, guys, that was pretty much. I think this is a very long ass video, but this was pretty much the trade that I took today. Also, I missed one trade actually. Like after this movement, if you see the auction rotation, this movement right here, let me put it like this. As you can see, we're making lower highs and lower lows. Again, the trade that I could have taken, but I didn't because I'm already done for the day. Why do I have to trade more? But a very good trade was actually this short right here. If you went for this short, let's say you entered like right here, it's almost a 1 to 2, and as you can see here, it pretty much hit full profit. I didn't took it because I mean I just pretty much trade once a day, but this was also a very valid setup. Again, range extension on the upside right here. Range extension, we are in a double time frame condition, so again, fade the extensions. Fade all the extensions. That's the golden rule to follow. Fade the extensions on normal, on neutral days. So yeah, that's enough yapping. I'm running even out of voice. So I'll see you guys in the next time, maybe tomorrow, maybe in the next month, maybe in the next year. I don't know. But I'll see you guys again.